Welcome back. Let's focus on the consumer space now. The second quarter business updates are coming in. We've got two of them. Avenue Supermarts posted a positive business update. On the back of that, the stock is doing well. Marico, however, is a rare loser today on account of the company recording a low single-digit volume growth with margins being the same as they were the same time last year. Abneesh Roy, who's the Executive Director, Institutional Equities at Edelweiss, joins us now. Abneesh, of course, has been tracking the FMCG space very closely. Abneesh, what do these numbers indicate for the entire FMCG space? All hopes were pinned on recovery in the second half, but we do have the second quarter to, attend.
Yeah, thanks, Malu. Yes, definitely versus Q1, Q2 will be slightly tougher quarter on YOY basis. If you remember Q1, the base was a bit soft because of COVID, and also a lot of the summer categories saw very high growth because of very harsh summer. None of these two factors are there. So we will see companies definitely see rural volumes under pressure. Most of the companies will see urban growth being faster. If you see DMart results and Marico results, that is coming out very clearly. We saw DMart's revenues up 36% YOY, 6% QOQ, while on the other hand, Marico, which does have exposure to the rural segment, we cannot compare both companies like to like, but definitely rural is a challenge currently. Hopefully, H2 worst will be behind because of soft base and because monsoon has been good in 60% of the country, and also the farm prices are up. But companies like Asian Paints, for example, the margin will be quite soft on YOY basis. So Asian Paint will see good numbers, both on the volume front, price hike, margins will see a good recovery on YOY basis. So yes, this quarter, if you see the raw material correction which we have seen, will not be really visible for most companies because higher price inventory will be there. The rupee depreciation is definitely going to impact. And some of the raw material for HUL, for example, in terms of caustic soda, borax, etc., have been inflationary. So H2 is where we are expecting recovery both in the volumes and on the margin. So tough quarter Q2 for most companies.
Okay, just to follow up then on DMart, you said that of course it's looking good this time around, but the stock has also rallied, right? I mean, from the low that we saw in May of 3,200, the stock is back at 4,500 now, which is a 40% growth. Do you think the best is in the price?
No, we remain positive on the long-term potential. If you see this quarter also, 8 stores have been added. I think investors in DMart look essentially at two things. One is how the store expansion is. Last 3 quarters, that has been strong. So we definitely see 40 to 50 stores addition being possible. And second is if you see clearly rural currently is under stress. So most of the retailers are obviously in the urban areas. That's the second point. Third, of course, also because startup capital is definitely drying up, all this competitive intensity from the e-commerce, also the quick e-commerce, those will clearly intensity will reduce. So that's also something which is clearly there in the minds of customer. So essentially, investors are flocking towards India. Investors are flocking towards more defensive names where the concern on the interest rate hikes, etc., are not there. Predictability or demand is there. So Avenue Supermart will be a play on those also, but from medium long-term perspective. Yeah.
It's interesting that you say that you think the intensity of e-commerce is probably going to reduce. That is probably also a read-through for the pharmacy sector. But Abneesh, I wanted your thoughts. You said that you expect a volume recovery in the second half. That's probably when we'll, see a downside towards inflation after the RBI rate hikes actually come into effect totally. What is your assumption for volumes then for the second half, and cumulatively, where do you think volumes would be for the entire fiscal?
Sure. So definitely we'll have a range of the volumes. For example, Asian Paints, even for this quarter, we expect double-digit volume growth, and for the full year also. If I see staples, some of the companies will have negative volumes in India. So someone like a Imami, someone like, say, Tata Consumer, say in the India part of the business, will have a negative volumes because of the rural stress. HUL, if I see, clearly did quite well in Q1 in terms of 6% volume growth. In Q2, of course, the soft base will not be available. My sense is HUL should see 2 to 3% volume growth in Q2. This should accelerate in H2 because of the base being favorable in terms of rural, because the slowdown happened last year. And of course, what will happen is because of the raw material deflation, we will see in soaps, for example, promotions coming back. That will also help the volume growth. So yes, I do expect that for the full year, maybe we should expect H2 being 2 to 3% higher volume for most of the companies. But definitely we'll be betting on companies which are diversified, where raw material correction is starting. Two categories already seeing recovery in terms of demand are biscuits and noodles. So that's why we like Nestle and Britannia. Those are definitely a play. And H2 will see more recovery happening there.
Right, biscuits and noodles doing well right now. We're all munching on them for sure.
Biscuits and noodles, I can assure you that. Whether or not we like Nestle and
I know, biscuits for sure. Abneesh, I take your point on promotions coming back, ad spends coming back, and this is something that we touched upon the last time as well, where maybe the benefit of lower raw material prices will be invested back in volume growth via promotions and brand growth via ad spends, etc., and whether that comes into margins or not. But be that as it may, it is also the Q2 update season before the result season. In the next couple of days, we'll get updates from Titan, Godrej Consumer and Dabur as well. What are your thoughts on that? Which one would you pick?
I think clearly urban focused demand companies will do better. So I would expect Titan to do better, especially if you see, because festive season is early this time. September month has been very good for discretionary part of the consumption. So I would say out of those three companies, Titan should do better. Out of Dabur and Godrej, my sense is Dabur should do better. Because in Dabur, if you remember previous quarter, the immunity was a issue in the base that is now resolved, and that was impacting both in terms of the mix and overall growth also. So I would say yes, Titan should do better, and Dabur should do better than GCPL, because GCPL issues on Indonesia continue to be there, and HI continues to be impacted because of very high rainfall in 60% and 40% at deficit also. So that remains impacted because of the season.
Okay. All right, Abneesh, we're going to leave it on that note. Thanks very much for joining in and speaking with us and discussing the entire FMCG space with us. Well, let's focus on some macros then. There was, in fact, a welcome relief when it came to India's trade deficit for the month of September. It came in at $26.7 billion, over $1 billion below the August levels. What does this mean? Is it sustainable? Lata's here with more. Lata.
Well, definitely good news, at least pressure of the rupee if the trade deficit is lower by $1 billion. Imports, the one that really bites, that was almost 62 billion in the month of August, and that's come down to around 56.5 billion thereabouts for the month of September. So that's a decent 4 billion fall, even more, 5 billion. The problem is that it also hurts exports, because export destinations are also going through a slowdown, and therefore exports are also a full 1 billion less than what it was last month. Going back to imports, the biggest relief has come from crude imports. They are about a good 2 billion lower, and that's primarily because the price of crude has fallen. Now, where this hurts, it is off highs. And I want to concentrate on that. Imports in June were as high as 63 billion. So now our 56 billion looks like a very good relief. And the problem is exports. Exports were as high as 38 billion in the month of June. And now look, we are down to 32. Look at the number of people who would have lost business. And trade deficit as well, of course, that is the relief. It was as bad as 31 billion in the month of July. And now we are at a good 26 billion, so relief for the currency.
Okay, good news over good news. The market's doing well and trade deficit has fallen. Thanks a lot, Lata, for that. Well, let's slip into a quick break. Market's still holding firm with the Bank Nifty seeing over 1,000 points of gains. On the other side, Ruchit Jain of 5paisa.com will be joining in with some trading strategies. Stay tuned.